So can we talk about Nvidia and Theta Decay? Because I saw your blog, and
Okay.
your blog's title was "I want Nvidia to go down." Nvidia to go down.
Yeah.
And
Hey, it
so I
did. Nvidia
currently
did.
am trading this. I have a put credit spread. I think same as you, 200, 205. And so I was hoping you'd talk a little bit more about Theta Decay and just how it affects after that 21 DTE, the long position and the short position.
Sure. Yeah. So when we look at Nvidia, this is one of those examples where, you know, where do you, if you buy low and you sell high, I'm just going to start at the beginning. If you buy low and sell high, like where were we when we set up this trade? And Melissa and I are talking about a trade that we set up in our Discord, MrMoneyMaxwell.com. But like, you know, you don't want to be selling if you were to sell your stock here at what, 220, like the highest that Nvidia has ever been is 235. Doesn't mean that Nvidia can't go to 500. It can tomorrow, but like if you sold here, you'd be selling high. Where would you buy low? You would buy off the blue and red line. So instead of just selling puts, because I think both Melissa and I we'd love to own some shares of Nvidia. Like it's a great company. I believe in it long term. I also think it got a little extended with the overall market, and now people are starting to like try to raise a little cash. So instead of selling puts where we would just sell like the 205 and probably collect, you know, like $200, we could sell a put spread to where we sell the 205, but we buy the 200, right? So if you sell the 205 put, you're obligating yourself to own shares of Nvidia at 205. If you own a long put at 200, you have the right to sell those shares that you were obligated to buy $5 lower. So $500 of defined risk if you keep the spread intact. Now, Melissa and I, we like to unravel those spreads, and we think of that long put as insurance. So you guys probably know, like the math says you should sell, you should manage or close your trades within 21 days to expiration, DTE, due to theta decay. Because when you look at the theta curve, let's look. Here we go. Come on. So when we look at the theta curve, if I can find it, here we go. And this chart's always confused me. I don't know about you guys. Like inside of 21 DTE, this curve gets really, really steep, right? So if you're selling an option, that's awesome because like you sold it for $1 and like just the time portion. No, this isn't the actual movement of the stock portion, the intrinsic side, but the time portion, like if you sell it for $1, oh wait, it's 75 cents, it's 50 cents, it's 25 cents. What do you know? It's 0 cents within those last days. The curve really slow here, slow, really fast. Now, if you're buying an option, if you buy it for $1 and the thing's losing value every day, you're like, man, what have I just bought like a Motorola flip phone and it's 2026 and like no one wants this thing anymore? I can't sell it. Yeah, you kind of have. So to answer Melissa's question, this is a great question, by the way. If you are going to buy, or I should say, if you're going to sell a spread because you're buying an option with the selling, if you're going to sell a spread, meaning you're going to buy an option when you sell an option, give yourself a little bit of time out here, right? So you want to kind of go, we kind of go in here. Like I don't really sell anything over 60 days, or I don't know. Some people might, but I like this little area right here where it's just a little bit slower. You're still getting theta decay, but that bought option that you have gives you a little bit of time. If you have car insurance, like if you have car insurance that expires in the next 10 days, what are you going to do on day 11? If you wreck that car, like how are you going to be able to cash in that insurance policy? So if you're going to buy some options, just don't go out into like under 21 DTE. If that means you have to kind of go out here to a little bit closer to like 50 or 60 days, do that. Now, if you want to sell options, if you want to just sell them and never, sell a spread, which is you buy the put, then sure, selling options inside this 21 DTE, it makes a lot of sense if you aren't as afraid of the gamma risk of actually, the option going up in price. But if you want the sleep at night insurance, like I like when I sell a put spread, go ahead, just go out a little bit further in time. It gives you a little bit of, it slows down the theta decay of the entire option itself. And that way you can sell that long put for a nice gain if you get a pullback. Like right here with Nvidia, we can sell our long put. Well, once I move my once I use the right selection tool, where am I going to look to get out of my long put protection? As close as I possibly can to buying Nvidia off of the blue line. Like, where do I want to buy Nvidia? Off the blue line. And can it go below the blue line? Yes, it can, but I don't want to buy it at 230 when I can pick it up around 195 or 200. So for me, I want to give myself enough time to close the long put, even if I don't get Nvidia all the way where I want to. If I can make $400 or $500 off that long put and collect what, $100 to $200 on the front, like that's $600 from a spread, unraveling it, where as you sell a put, man, you're just going to make the amount of premium that you sell it for. Like if you sold it for $3, the max profit's $3. If you sell it for a spread with the intention of unraveling it, you can make a lot more money. I know we did it with like ServiceNow. We had a really good win on ServiceNow with our weekly income newsletter. We made like almost $700 on a put spread. Whereas if we sold a put, we would have made $200. So go out a little bit further in time. Don't sell inside that 21 DTE. Break the rules a little bit.
So it sounds like you're saying buying a long put, I'm going to use that as an example, buys you time.
Yeah, I think that's a good way to think about it.
Okay.
Yeah, and instead of talking about it just being a put, think of it as an insurance policy. That's what it is, right? So the longer you have on your insurance policy, the better it is for protecting you, right? Because like I know car insurance doesn't actually lose value every day, but stocks do. And so like just think of it as insurance for me, it's like sleep at night protection. Because I know, Melissa, I know if I sell a put on Nvidia at way up here at this red circle and it starts pulling back, like we're going to see losses every single day that we look in. It could be paper loss, but eventually that paper loss turns into a real loss. I know if I sell a put spread and Nvidia goes to $1 a share, it's not going to, but if it did, I had the protection of knowing, listen, I'm only going to lose the width of the spread. That's the most I can lose here. So hold on to the protection as long as you can, but it has to make sense. Like you said, you're buying yourself time because you don't want to get into here where that insurance policy is decaying so fast from the day that you have to get the move down or you don't make any money. Yeah, that's a great question.
So on your Nvidia chart, that purple line, I really love your purple lines. You have them on all your charts. Are those typically your plan of where you'd like to buy shares, or what are the purple lines?
Yeah, so I love purple lines too because they mean a lot to me. I don't know what this purple line is. Let's ignore that one. That might be wishful thinking, but like purple lines mean a lot to me. And I'm going to hop over to Google just because I'm really familiar with this stock. And I used to keep purple lines on this, and then like Nvidia, I'm sorry, Google just took off on me, kind of like Nvidia over the years. But the reason I love these purple lines is I go to the weekly chart and I zoom out, and whenever I look at my charts, it would really help if I had the right tool. Whenever I look at my charts, I just kind of know where weekly support and resistance is. So like we're looking at the chart from 2023 to 2026, 2025. When we look at these purple lines, you're like, well, what does this purple line do? Let's just look at this one, like 137. So Google was, this was resistance, and eventually I think everybody knows resistance eventually becomes support. So resistance right here became support. So a purple line for me is weekly support and resistance. And the reason that I keep it on my chart is because it's a possible place for a reversal. Like right here, if you sold cover calls, up here, you would have been fine until eventually you got called away. But look, this weekly resistance became support. Then it became support again, right? So, but let's go back even further. Let's look back at, what is this, 2021. This same line was resistance back in 2021. It became support. Look right here, this one little wick on May 23rd, 2022. If you bought Google at 137, you could have sold it when it hit either the blue line or it hit this other weekly resistance and support, right? And hey, does it work all the time? Absolutely not. Google came back down. But look at this. We're still going to look at this. We're looking at the 137 or yeah, this line right here. We're looking at this line right here. Okay. Did you take a little haircut here? Yes. If you held on, you were fine. If you didn't, maybe you hedged. This line became resistance again in 2024, and eventually it became support. Look, 2025, this same line became a great place to buy again. Right. So these lines, they go, the reason I actually use a horizontal line is because they go for a long time. You can do the same thing. Like, I don't think Google's ever going to be $59 again, but if it was, look how many years that 59 line went all the way from 2018 to 2020, almost 2020, at the end of 2020. So use these lines for weekly support and resistance. And for me, that is a possible reversal zone. I can look at my chart, like just pull up. We go back to Nvidia. Now that you know what the lines are, like when I see a purple line, which I put a little extra dash on this one, but when I see a purple line next to a moving average, that just gives me a little bit of extra confidence. Like, should Nvidia bounce here? Yeah, it did before. Should it definitely bounce in this area? Yes, it has before. Should it bounce here? Yes. So the more lines or the more moving averages I can get between myself and the strike of my sold put or my put spread, the better I feel, because I'm like, hey, Nvidia should bounce here at the 10. It should bounce here at the 50. It should bounce here at this weekly support. It should bounce at the 100. It should bounce at this weekly support. So anywhere I can get, like, man, if you can get 3 or 4 of these lines in between you and your strike, it just makes you feel better. And like trading, I think everyone knows this, but trading's mostly emotional. Like, you want as many lines that mean something to you as a reason why the chart saying it should reverse here. It makes sense that it has reversed here in the past. And if I'm buying it, I feel like I'm getting a good price. So I love weekly support and resistance. I talk about it all the time, and I have purple lines, and it's almost all my charts. Like, it just doesn't even matter. Every chart I look at, I put purple lines. That's weekly support and resistance.
Yeah, it's good. And it's also good because then for everybody that's following you on Discord, when you mention your support or resistance, we already know what you're talking about, and we can go and look on our own charts and then make our own decisions. I really liked your win email this week, the Choose Your Own Adventure. And I think I emailed you back that those were the greatest books when we were growing up, the Choose Your Own Adventure. And in the stock market, you get to do the same thing. Choose your own adventure. Not everybody's going to trade the same strike or necessarily trade the same day.
Yeah, I agree. The only problem with the purple lines is you have to stay on it, especially in the kind of market that we're in now. Just know, like, I put a line on the chart right here, but that doesn't mean that it's going to definitely stop at that line. Think of it like a box, right? So, like, should Robinhood have like hit a little resistance here? It kind of makes sense that it should. And where do you want to buy some? Well, I buy it off the blue line or this little purple line, $65. So, like, I can tell you right now, like, I'll sell a put on Robinhood at 65. Just based off the chart, just looking at the chart by itself within a matter of seconds, right? So this is a really good unlock to making really quick decisions. If you're super busy and you like, I need to get in and out of a trade, have the purple lines on your chart. It builds your confidence. So.
Yeah.